get to the meat of things. Let's start the Q&A. Marvin has actually been answering a lot of the questions that you guys have been entering into the chat. Thank you, Marvin. We'll have to call you back in first to answer some questions where they can all see you. Thank you, everyone, for sending in all your questions. So constantly answering all the questions. So thank you so much for that. Siya mismo sumasagot. We'll start off with some advanced questions. As I mentioned earlier, we did categorize them into groups so that we can cover more topics. No? Okay, so the first category is, how do new investors start investing? We have a question from Ritz Kevin. What is the best strategy and investment for a low-income investor? Similar question from Gloria. What can you offer to one who wants to invest with not being too technically capable?
Allow me to answer that, no, so we can go through it very quickly. And we can also look at the other questions that are more relevant to them later on, diba? So for this one, those who have low-income investor, I suggest you focus your attention on what you do now, no? Meaning save and invest, meaning put a part of your income, even if it's low income, save a little amount. Like for example, in CSG, our minimum is only 500 pesos, an additional 100 pesos. You can actually do a monthly strategy. We call it Easy Investment Program. That's the best strategy for a low-income investor, meaning you can do it regularly. Now, the next question, what can you offer the one who wants to invest even though not so technically capable? This is where the fund manager really is very helpful. You can focus your attention on what you do in your job, and then let the investing be done by experts, by the fund managers. And that could be a very good strategy for you. Look at the funds. We have a lot of funds in the COL, and we launched a new fund now, CSG, that you might want to look at.
Okay, thank you. Let's move on to the next.
Let's look at the other.
Yes, questions regarding fund investing. So from JR, what is the best type of mutual fund to invest in? Another question from Miguel. Is it good to invest now into mutual funds? And the third related question, I am still interested to invest in mutual funds through COL Financial, although I am already 66 years old. Is it still advisable?
Okay, let me answer all this very quickly. What's the best type of mutual fund really depends on the purpose. You invest for a purpose. Mutual funds can be short-term, medium-term, long-term. Money market, bond fund, equity fund. So if you have a short-term need, it's just money market, mutual fund. That's the best type for you. If you have medium-term need, 2 to 3 years, then you put it in the bond fund. Now, long-term objective for your retirement, for future investment, for future long-term needs, that's your equity fund, like the CSG, like COL Equity Index Fund. Second question, is it good time to invest as of now? Yes. Depends on your purpose, depends on your objective. It is perfect for anybody for a purpose. So short, medium, long. Third question, I'm still interested to invest, but I'm 66 years old. That is fine. I'm 62 years old. We will live longer. I think we can live about the 80s or 90s, and you can really invest. Now, my suggestion is you allocate properly, appropriately, meaning based on your risk appetite and based on your needs in terms of your cash flow. If you have earnings already, you have enough for your daily expenses, you can invest long-term. So even if you're 66 years old, there's a lot more. Hopefully, you're still healthy and you can live longer. Even you can live for 100, you can invest long-term. So allocate it properly. Okay, let's go to the others. I think the interest on the others, might want to skip to the...
I think we can go to the next one, the next group.
The other one, next one.
Related to CSG.
You might want
to... Go ahead. Take a look at it.
Might want to take that, Zerge?
Yeah, sure. Yeah. All right. So are the top 10 holdings of the fund usually the COL top picks? If not, how is the top holdings different from the top picks? Actually, very good question. Given that you see a lot of the IC members actually out very publicly. So normally, yes, you would find a lot of overlap, but it's not all the time. So I think the way you could view, like let's say, the recommendations of April through calling the shots, these are more strategic, long-term calls. Whereas, like let's say, in the fund that we manage, we also go into tactical positions, meaning much short-term in nature. You're just trying to play a particular move that you expect. So like let's say, yeah, April, normally the time horizon for the calling the shots picks is 1 year holding period. Whereas like for us, but depending actually when on where we see the market, if we think that, well, like I say, the rally from the PSE today, that's probably just 6,000 up to 6,500, and then it's probably gonna consolidate again. Then we'll try to buy today. We're gonna try to sell it when it goes to 6,500. Diba? So some of the top picks of April that are there might not be the top picks that we have already. Yeah.
Yep.
Yep.
Good.
Okay. Maybe the next topic. Shifting to CSG. Is it better to invest more in a COL CSG than COL EIF? COL EIF is the equity index fund for the long term and for maximum returns. The next question we have is, since the PSEi has not gone up for the past 10 years, is it a good strategy to switch my existing index fund to the COL Growth Fund? Zerge?
Yeah.
Sorry, Boss Marvin, you can take that.
Let me take that. Let me take that. No? Because you know, for the past 10 years, the index hasn't gone anywhere. You know what? Investing index fund may be disappointing for the past 10 years. But previous to that, no, 10 years previous to that, like 2003 to 2013, the index has gone up 6 times. So you really have to look at it over the long term, no? Not 20 years. That's really the look at it right now. Now, investing in CSG relative to the index fund really is a complement. No, CSG you may consider is a lower risk equity fund because it doesn't fully invest everything in just copying the index. It can go cash, it can go fixed income. So there is risk management within the fund. The index fund fully invested, 30 stocks. It has to be in 30 stocks 100% or 99%. So it's really for passive investing and really long term. Now, CSG is more opportunistic. Right now, for example, that Zerge has been explaining, we are tactically moving it in fixed income for the moment and then moving it to equities later on. It can happen in the next few months, but we are managing actively. So you can combine it. You have a passive investment and you have an active investment combined for these two funds. Next. Let's get the next.
Okay. I think at this point we can jump into some of the live questions that we have. No, I've been looking at them, and there've been a couple of questions about where can I find, how can I find the CSG on the platform?
Zerge?
Yeah. Hold on, if I could, sige. So one of the ways that you could do it is when you log in to your CO. So this is a bit more practical advice. When you log into your COL account, you click on the mutual fund tab that you see on the homepage. That will take you to the COL Fund Source platform. When you're there, you just search XCOLCSG. That's the code of our fund, and it will actually port you already to the order page, and then you just basically input the type of amount that you would like to buy. So for whoever asked the question, maybe our team could get back to you also later. I think we have material that will specify exactly how you could do it. And as a follow-up, I guess, to all of our attendees, maybe that's something that we could also do and provide the specific steps for you guys on how to access and buy the fund in the website. Yeah, so we will address it.
Okay. We have another one which was answered by Marvin, but I think it's a nice question to re-ask. For the CSG, how often do you review asset allocation strategies? Is it published for investors to understand?
Yeah, how often we review is weekly. We meet weekly every Monday. The investment committee meets. We talk about top-down approach, bottom-up. And now, that's sometimes we change asset allocation, but it doesn't really change like 100%. No, I mean, We also do tactical movements, 10, 5% movements in the asset allocation. Now, it is published also every month as required. We publish our fact sheets or fund highlight sheets in our website. You can access that.
Okay, thank you. We have other questions from our Slido. Maybe we can check in with those. Okay. Zoom question. With long-term interest rates at attractive levels today, why do I still need to take a risk by investing to stocks? From John G.
Yeah, let me get that. No, John G. John, that's true. Long-term interest rates are attractive today. Yes, you can get 5-6% guaranteed. Why do you still need to take a risk by investing stocks? Now, fixed income is for those who just want to buy and get interest, meaning the value doesn't really change, meaning that's the interest you get guaranteed for the next 10 years. Aside from, if you invest in the stock market, you have the potential of capital gains. It is true that it is not attractive today, but now could be the best time to be investing in the stock because people just don't want to touch it. As you know, buy when there is blood in the streets or buy. They always say that it is better for you to buy at a low price rather than the high price. Because if you wait for interest rates to go down, probably that's the time when interest rates are down, stock market might have been high already. You already missed the opportunity. That is why we are coming up with this webinar today, this level, because we believe that there is an opportunity for you to balance your portfolio. You have a high yielding fixed income, and then you come in with your long-term investment on equities that will give you better returns over the long term.
Okay, thank you. Next question. I've been investing in index funds for some time now, primarily because it invests in blue chip companies and the management fees are lower than actively managed funds. So why should I buy the CSG when it invests in the same companies and the fees are higher? From Mr. George.
All right. Yeah. Okay. Yeah. Maybe I could take a stab at that one. So first of all, just to also help clarify, it invests in some of the same stocks, but also not all of the same stocks. So definitely you buy an index fund, it's all 30 funds in the index. So with the CSG, it's not necessarily all of those names, first of all. And then secondly, when you invest in an index fund, as Sir Marvin also already pointed out earlier, it's always invested. So who's responsible of selling your index fund when the market is stoppish? Who's supposed to take your money out of there? It's actually you, the investor. But like I say, when you have it with CSG, and we're not completely into index funds also, but we invest in index funds. But when we see that the market is stoppish, we will sell and take profits on those positions. We will do the selling for you. But if you're directly invested in the index fund yourself, you're the one who would have to sell the position. Yeah, so actually that's a long that's a short actually answer. So I think that's why the fees are also higher, like I say, for an actively managed fund, because you're paying as well for the skill of the fund manager and the team behind it, but to be able to do those moves for you, and hopefully in the long term be able to return value.
Okay, thank you for that, Zerge. Let's move on to the next question. Okay, a question from Bobby V. What time horizon are you looking at before the stock market can start to recover? When do you think interest rates will peak, and when will it start going down?
Yeah. All right. Yeah. Maybe I could also take this question. So in terms of the time horizon for a stock market recovery, I think our chairman always has a very nice way of answering things like this, diba? Yung kapag alam lang natin, mayaman na tayo. But kidding aside, at least like let's say for me, I also tried to look like how long previous bear markets in the Philippines tend to last. Let's say 1987, 1990, when there was a coup, there was a new government, there were a lot of brownouts, 1996, Asian financial crisis, 2000 dot-com bubble, 2007 global financial crisis crash. You would notice that when the market fell and then it started to bottom, the bottoming period roughly around 3 to 5 years. So I'm not saying that the same type of time frame is going to happen again today, but if you start counting, like I say, the massive drop in our market from the COVID pandemic, 2020 yun eh. So 2020, 2021, 22, 23, we're around 4 years already in terms of that bottoming phase. But when will it start recovering? I mean, naturally, we wouldn't be able to say for sure, right? But if you're looking at historical context, mga nasa 3 to 5 years, we're around that time. Yeah, and I think this is a very good question. When do you think interest rates will peak? It's also very hard to tell, but I think this one will be dependent on inflation, where inflation goes. Now, there's evidence, like especially recently in the US, that there's some disinflation going around. So that's the main reason why the market went up the past few days. Kasi mukhang pababa na yung inflation, and as a consequence, mukhang tapos na yung Fed. Di na mag-hike ng rates. But hindi din natin alam kung kailan sila magka-cut. So I think these are things that we need to monitor very closely, diba? Monitor very dynamically. But like at least our assurance to you guys, for your fund managers, is that we're gonna watch it very closely and try to position the portfolio in a way that it will benefit when we start seeing shifts.
Okay, thank you, Zerge. We do have more time, so we can still take more questions. Okay, from Mark M, do we need to pay the fund manager aside from the 1 to 1.5 annually, or is that it already?
Yeah.
Zerge?
Yeah, so that's it already. So that's actually one of the advantages also, I guess, of investing in funds. So like this is the only fee that you would pay, and that's annually, diba? So for example, bumili kayo ng CSG, binili nyo in January, binenta nyo siya ng March. Yung parang effective charge sa'yo actually is not 1.5%, because 1.5% is the charge for the entire year. Yung charge sa'yo is just a quarter of that, 1/4 of that. Because that's the only time that you held the fund. It's just for the time frame that you're actually charged. But just to clarify also, we, at least on our end from CMI, we don't have any sales loads that we charge. There's no front end load, there's no exit fee, back end load. There's also no commission. So I guess some of our viewers here, sanay kayo mag-trade ng stocks, diba? You pay buying cost, buying commission, selling cost, mga taxes and everything. So dito wala. That's it already for you, the 1 to 1.5.
Okay, thank you. Okay. Question: if the Philippines is expected to have a long-term resilient growth, why is it increasingly becoming more irrelevant to foreign investors? I think Marvin, you kind of answered this already on the chat.
Yeah,
Good question.
I myself is asking, bakit nga ba? but you know, kasi you have to understand, foreign investors are large funds. They really need liquid markets. And our market is really not that liquid relative to the other markets. That's the main reason. That's really the main reason. Just liquidity. Our market is really very small. That is why there is a case for local investors to take advantage of that situation. You can stock pick now. You can buy companies at a good value, buy businesses, and there's no noise coming from foreigners really going in and out at very irrational moments. And I think really you just buy businesses and you can expect long-term growth given the demographics and the potentials we have.
Okay, thank you. Yeah, when I saw that question, I was like, that is a fair point. Good question. Okay, next question, please. If the funds earn dividends but does not pay out dividends, I'm assuming the dividends earned will form part of the value of the funds, unless it is simply not enough to pay out for fees. What is your take?
Yeah. All right. Yeah. If I could take that. So yeah. So the dividends that we earn from the stock positions that we're holding, on the fund is simply reinvested. So it goes back to our net asset value in the form of cash, and then we will reinvest that in the market. So that's really what we do with it. So the way you would, like I say, see it from your point of view as an investor in the fund, but whenever the company pays out or declares the dividend, it will accrue to the NAV, to the net asset value of the fund.
Yeah, and to add, dividends earned by the fund is tax exempt, meaning because it's a company, there's no 10% dividend tax. If you are a local individual investor and you get dividends, you get taxed. So the advantage in a fund, the fund is not taxed on dividends. So we reinvest the dividend and it's added to the value. And in fact, it's even enough to pay for the fees, diba, Zerge, particularly on the index fund. That's why the index fund is yielding more than the index itself because of the dividend.
Yeah. Yep.
Okay, thank you. Let's move on. It's a good pace. We can try and answer as many as we can for the next 5 minutes, siguro. My son, who is 12 years old, wants to invest in stocks. I'd like to recommend CSG to my son. Any product you would recommend for young investors? From Miss Julie C.
Ano yan? 12 years old is very young. You can take more risk. Any product you'd recommend to a young investor, I think you can get an index fund and the CSG. CSG is really what we believe is the fund that you can really build your wealth in because it can move in different markets, asset classes. It's very flexible. That's why it can really, that's a fund you can look at. But any other product, as he grows older, then you can consider other funds, like a money market for his emergency fund and some bond funds for his needs. But if he's really very young still, just starting, better long-term investment like an index fund and a CSG.
Okay. I wish I started also in 12. Okay, I think we have enough time for the last two questions. Okay, some of the pain points of Filipino investors is access to global markets and converting peso to USD. Is CMI developing a product to hopefully address these? From Ms. Shane B.
Yeah, let me answer that. No, not yet at this point. We just launched index fund. We just launched CSG. We will be developing it down the line. But right now, we want the Filipino investors. We want to buy Filipino and invest in Filipino first. And then later on, we'll consider global markets. Thanks.
Okay. Last question for the afternoon. Okay, would CSG invest in preferred shares given the attractive yield it offers? From Mr. Jeff T.
Yeah, so thank you for that question, Jeff. So the answer to that is yes. That's definitely possible and something that we could consider down the line. But of course, analysis is not taken on a vacuum. You need to compare asset classes relative to each other. So I think, of course, with preferred shares, it moves like a bit like fixed income, but it also has a bit more volatility given that it's more equity-like. So I guess we need to weigh the yield, like I say, in terms of a government security. Like I say, if it's almost 7%, there's a preferred share that's 8%. Like I say, for us, especially once we go big, we're a fund. I think the liquidity aspect is something that we would prefer in a scenario like that, and that's why we might tilt more towards fixed income in that case. But nevertheless, I mean, we are allowed to invest in preferred shares. And if the time comes that we see something that interests us, then we could also go for that.
Okay, thank you. I've been told we can do one more question. What is your forecast with the PSEi end 2023 and by 2024? From Roberto S.
Yeah. All right. Sige, if I could take a stab at that one. Baka pag sinabi ko yung figure sa inyo, hindi kayo maniwala kasi mataas. but that's only just to show you guys that there's really a lot of value in the Philippine market. So this is not the forecast of the PSE. I'm just telling you. So 8,100 is the fair value estimate of our analysts for the market for 2023. Fair value, meaning if you evaluate each of the stocks that's there in the PSE, what they're worth, what they're fair, what their business capability is over the long term, 8-1 dapat yung market. But we also know that there are other elements that come into play, such as sentiment, our other relative investments doing as well. So I think you need to take a more, I guess, a measured approach. So one of the things that also guide us in terms of our decision making are the technicals. And if you look at it, like I say, on the chart. So alam natin mura, alam natin it's ideal, but alam natin the environment at this point is not very conducive for stocks. So that means also, like I say, if the market rallies at particular price targets shown by the technical, baka you should consider selling there. So at least our target for that in terms of where we think the index could move up until, like let's say, the end of the year 2023, if you follow, like let's say, the tech spotlight of Juan is, those are figures that we actually subscribe to very closely. So like this initial move, we're looking at around 6.3 as the next resistance area. If it's able to break out of 6.3, and like I say, about December, normally you see the market rally because of the Santa Claus effect, diba? We might see top end target of 6.7. That might be what we're watching. So for 2024, hopefully magkatotoo yung 8.1. But it's really hard to also say for sure. There's a lot of overhead resistance for the market. So even if makalusot tayo, like let's say ng 6.7, then you're gonna have 7,000 there as next resistance, 7.5. So yeah, but I think as long as we're able to, like let's say for the PSEi, return more than your fixed income plus a little bit of premium above 6 or 7%, the market is up, like let's say 10% next year. I think that's already a relatively good return.
Okay.
So that's how that is for that. Yep.
All right. Thanks, Zerge. Thank you, Zerge and Marvin. For now, that's all the questions, but don't worry. Just post your questions. We'll try to answer all of them by getting in touch with all of you. Any last words from our two speakers? Any parting words of advice?
Zerge, go ahead.
Yeah, sige. So like for me, I just want to thank everyone who spent time this afternoon to join us and to hear at least our thoughts and listen to at least this new product that we are offering, which is the CSG. So I just hope that what we did this afternoon was helpful to you guys. And if there's any way we could help you, so we're COL here, we're a family. Just also reach out to us, and would be glad to answer other questions or concerns you might still have. So thank you for the time.
Thank you.
Yeah. Thanks, Zerge. And also thank you for those people who attended and those people who are watching. I think this will be replayed. No, I think what I want to leave the audience right now is that investing in the market is really difficult at this point. There are so many information coming in, so many things happening, so much uncontrollable risk, global risk, local risks. It's very difficult. And life itself is already difficult. I mean, you are doing things in your work, in your business that you need to focus on. And then you have to look at the markets. And that's why consider looking at fund managers to manage your fund. I mean, put it in funds that you believe that can benefit your long-term objectives. And look at the ones that are really accessible to you and the ones that will benefit your long-term goals. Now, consider the things that we launched, the CSG, and consider the ones that can really navigate these difficult markets. That's what we designed to do. So we do this every day. That is our job. That is what we do, and that we've been doing it for so many years. And hopefully, you consider setting aside an amount regularly and focus your attention on what you do and what you do best. But don't forget to put aside certain amount, depending on your risk appetite. Put aside and then do it regularly, and you will be able to build wealth over the long term. And I hope we were able to help you with this webinar and give you some insights on how we look at in 2024 and how you can manage your portfolio moving forward. Thank you.
Thank you, Marvin. Thank you, Zerge. Yeah, I mean, it's such a wonderful conversation, and if I could just put together some of the key takeaways, just to run it down. No? It was a very fruitful an hour and a half, and just some key event takeaways. No? Number one, there are opportunities in the market despite today's difficult environment. You just have to know where to look. You have, as they've both said, we have to look for stocks that will thrive in this higher for longer interest rate environment. You have to have cash, dry powder, to participate in all of these tactical opportunities. We have to invest in good names that will pay you to wait. So these are the names that pay good dividends. And as Marvin mentioned early on, stock picking is key at the moment. Number two, approach investing with a multi-asset approach. Naturally, we're in the equities market, so our bias is really in equities. But we should also be able to adjust when the market is telling us to. We have to look where the opportunities are present. So if switching to a different asset class like fixed income, if that's the move to make, then we have to go ahead and do it. Or, of course, we can also allow CMI to do it on our behalf. The last takeaway is that the COL Strategic Growth Fund is an all-weather fund that's really worth considering. Because of the dynamic and flexible asset allocation, the fund is able to position in what they feel will give value to the clients, whether that's in stocks, fixed income, or even if it's just in cash. It will try to adapt given where markets are. And in that sense, it's truly a fund for all seasons. So with those key takeaways, I hope all of you found insights in today's conversation on how to actively invest for growth, even when the markets say no. Okay, and thank you to everyone. If you'd like to join the future COL Conversations, you may register through the link that's shown on the screen at the moment. Again, thank you to everyone. Thank you to Zerge. Thank you to Marvin. I hope you all had a wonderful afternoon. Once again, I am Chino Tobias. Thank you and good afternoon.